XYZ Company's classified balance sheet below should help you see how a classified balance sheet can provide significantly more useful information to users than what unclassified balance sheets provide. Please take a moment to review XYZ's classified balance sheet and see what you can learn about what management intends to do with its assets and liabilities in the upcoming year. For example, what pattern do you see in how the assets and liabilities have been ordered from top to bottom? Why do you think these assets and liabilities were placed in this particular order and not in some other order? What do the noted classifications tell you about management's future intentions for each asset and liability account, the timing of such intentions, and the impact of such intentions on XYZ's future cash flows? Based on your review, you should have noted that all of XYZ's assets and liabilities were classified from top to bottom in order of their liquidity, with the most liquid accounts at the top and the least liquid accounts at the bottom. Note, in the US, we place the most liquid items at the top of the balance sheet, but internationally, some businesses are allowed to reverse the order of liquidity by placing the least liquid assets at the top and the most liquid assets, cash, at the bottom. Since this accounting course focuses on teaching US GAAP rather than IFRS, we will place the most liquid items at the top and then work our way down. According to XYZ's balance sheet, management has indicated that its most liquid asset is cash and cash equivalents, and have correctly presented it at the top. Land appears to be XYZ's least liquid asset because it was placed at the bottom. Management's classification of land at the bottom of the balance sheet indicates that management plans to take at least a year before converting the land to cash, and that it expects to convert all of its other assets to cash before it converts land. Moving over to the liabilities. You should note that management expects to pay off its accounts payable first because they were classified at the top of all current liabilities. In addition, we can see that XYZ plans to pay off its other long-term liabilities last, as indicated by their placement at the bottom of all liabilities. In order to properly classify liabilities, management will often refer to payment terms with suppliers, prior payment history, as well as contractual payment terms for their notes, mortgages, bonds, and other liabilities. Here are some questions about XYZ's liabilities that its classified balance sheet might help us answer. Do you think XYZ will actually be able to pay off its $20,000 of current liabilities when they come due within the next year? What information and accounts would you look at to answer this? What numbers will you use to arrive at your conclusion? Which of XYZ's $130,000 in assets do you think it will most likely be able to convert into cash so it can pay off the $20,000 of current liabilities that will come due within the next year? Hopefully you notice that these current assets will be the most likely to help pay off these current liabilities. Later in this learning module, you will learn how to compute and interpret the current ratio, which is current assets divided by current liabilities, which is a financial ratio that helps users assess a company's liquidity and its ability to pay off its current liabilities.